Welcome back. It's time now for Hot Picks, and today we are zeroing in on 3 plays in the mining sector. Our next guest has picks in copper, gold, and lithium. So let's get more perspective from Cole McGill, Mining Equity Research Director at Stifel Financial. It's good to have you join us. Thanks so much.
Thanks for having me. Good to be back.
Before we get into your actual hot picks, I just want to talk about, the metals sector as a whole, like gold down today, copper down, lithium down. But you say this has the potential to benefit forward-thinking investors. Why is that?
Yeah, I think the way to kind of preface investing within the commodities equity space right now is to kind of take stock of the fact that we've seen a lot of the froth come out of the market, but the central tenet towards the thesis, which is revaluation of hard assets, hasn't changed since the war in Iran began. The Strait of Hormuz is pushing energy prices up. That's going to have an impact on margin expansion with respect to a lot of the miners. But the central tenet towards de-dollarization, towards global bifurcation, electrification, especially in the East because of energy prices and diversification of energy sources, I think is going to be a continuing trend and represent secular upside over the next, call it, mid to long term.
What about potential rate decisions further down the road? Obviously, the war in Iran is influencing how the central banks are kind of thinking of things, so it's hard to tell what's going to happen. But does that have any effect, or do you watch for that in terms of what's going to happen with the price of metals?
Yeah, 100%. That has a definite impact with respect to near-term gold upside. But again, I think that the central tenet, again, being that de-dollarization, being the broader macro theme towards revaluation of hard assets, kind of underpins the kind of upside towards gold exposure as well as copper exposure.
Okay, so let's get into it then. Your copper pick, we'll start with that, is ATEX Resources. What is it that you like about this one?
Yep, so ATEX Resources is a pre-revenue, they're a development exploration stage company with a large asset in Chile. Chile is home to around 30% of the world's copper production. Chile and Peru account for almost 50%. And they're home to kind of the legacy assets that have kind of produced a lot of the secular growth and expansion within supply expansion over the past 25 years. ATEX's flagship asset is their Valeriano project. That's around a 33 billion pound porphyry. So for perspective, that would be a top 10 undeveloped asset globally. And really what's kind of taking their asset to the next level is the recent discovery of some of the near surface higher grade mineralization. That I think has the ability to increase competitive tension for the asset and really drive multiple expansion with the name and kind of the thesis behind what we're seeing with respect to metal expansion is since 2020 or so, we've seen a kind of geologic understanding whereby drilling deeper within the kind of epithermal porphyry continuum in the Andes through the likes of NGEX's Lunahuasi, NGEX's Los Helados, Filo Mining's Filo del Sol project, which was a $4.5 billion acquisition by BHP and BHP and Lundin back in 2024. There's been upwards of $12 billion of value creation within this thesis, and I think ATEX is prime for some of the secular rotation down cap towards a kind of $1 to $2 billion names. And I think you can see good downside protection within the name with respect to that Filo transaction, and then good upside with respect to the fact that they've got some really strong horsepower geologists powering a drill program that's really in the meat of it right now. And we're expecting some good drill results over the next 3 to 4 months.
And obviously, when we're talking about the story of copper, there's high demand for it, not a lot of supply. But obviously, we're hearing about all these big companies spending more on AI, which of course you need copper for all of these data centers, everything involved with that. Are there any risks at all with this company, and maybe related to that or maybe not related to that?
Well, I think that's the interesting aspect with respect to growth is if you go back over the past decade or so, you've seen a prioritization of large miners to prioritize large capital, return of capital to shareholders. You've seen muted volume growth within the likes of BHP, Rio, Antofagasta, and Freeport. And really what you've seen since kind of 2020 or 2011 to 2012 is an increase in buybacks, an increase in shareholder distributions, repairing of balance sheets, and minimal investiture within growth. And so that presents an opportunity for the kind of down cap, pre-production, large scalable developers, I think that can kind of fill the next wave of supply. And kind of for perspective here, if you go back to 2000, the average grade of the top 20 copper mines has dropped around 30 to 35%. So you've seen reserve grade drops, you've seen lack of investment within new supply, which I think presents a really good opportunity for the kind of earlier stage single asset growthy development and exploration stories that will likely need to be acquired to support new growth within the next cycle.
So interesting. Okay, your next hot pick is the gold pick for today. So Montage Gold, obviously, gold is just in general a very interesting story right now. Usually is.
Yeah, and so the way I kind of think about alpha with respect to the next cycle is that of looking at single asset developers that are transitioning towards the producer stage, which get a revaluation from being valued on a price and asset value basis to a price of cash flow basis. And you've seen this thesis work with a lot of single asset developers where they outperform the GDXJ and the GLD pretty significantly, upwards of 90% in the 2 years prior to commercial production. That same re-rate thesis is really what's been playing out with Montage. And I think the fact that stock has kind of sold off upwards of 25% over the past month presents a pretty good buying opportunity for the name going forward. For perspective here, you can think about development assets with respect to the three quote unquote Ps, people, process, and property. The property is Kone. It's a Cote d'Ivoirian single asset developer. Good access to infrastructure. Majority of the capital has been spent on the project. They're around 65% on the way through production, with first production expected towards the end of the year. The people and the management driving the asset forward is kind of a triple threat of an old Endeavour Mining management team that's kind of recapitalized this asset and brought in the CFO, the CEO, as well as the Vice President of Exploration, who's explored and discovered over 15 million ounces of gold within Ivory Coast. And then their CEO, Martino De Ciccio, has helped finance this asset in a way that really has minimized the exposure to debt and equity through financing.
Okay.
So you're left with an asset that has an ability to grow. The market's really pricing in effectively their scoping study from 2024, but I think there's a lot of upside with respect to production growth for the asset and mine life extension. And then finally, what I think really kind of takes the asset and the company to the next level is the fact that the market is now starting to price in a change in business model for Montage. They're kind of in the early innings of shifting from effectively a single asset ramp to a self-performed value uplift model through some of the investments they've done with respect to consolidation of African gold, of Aurum Resources, and a few other names. So they're really becoming the kingmakers of new value creation within Cote d'Ivoire in West Africa.
We are at a time, so I'm going to ask you to be quite quick with this last one, but your last pick is Lithium Argentina. What is it you like about Lithium Argentina?
Yeah, so Lithium Argentina, we've seen a rebound with respect to lithium prices due to new demand drivers entering the market and kind of layering on top of EV, which is predominantly energy stationary storage, which is directly linked to AI and increase in power consumption. Energy stationary storage is growing at around 50-55% on a year-over-year basis. That's really driving the uptick in lithium pricing. The way I like lithium exposure right now is if you can look for assets and companies that are low on the cost curve and an ability to deleverage and transition to a free cash flow inflection point. That is Lithium Argentina. They've ramped up the asset, which is Cauchari, fantastically well, faster than a lot of other comparators within the region. And they've got two growth projects I think the market's going to start to revalue as pricing starts to unlock the balance sheet.
Okay, so interesting. Cole McGill, Mining Equity Research Director at Stifel Financial. Appreciate your time. Thanks so much.